and welcome to Big Deal. Now, what we are seeing on the deal street is a lot of equity issuances. SBI's QIP, a large one at that, about 15,000 crore rupees. It's a whopping amount, and that got done last week. So that is clearly the big deal of this week. And the man behind and the bank behind this particular deal, which was also the lead manager for this deal, was Bank of America Merrill Lynch, and Sanjeev, who heads the global capital markets for India business for BofAML, is right here with me on Big Deals. Thanks so much, Sanjeev, for joining us. So this one was a big deal, of course, a concerted effort by all the banks put together. But Bank of America Merrill Lynch has also been involved in many large transactions. We saw Kotak Mahindra Bank's QIP as well, Yes Bank, Hindalco. So many big equity issuances. But the markets currently are now looking a little volatile. Is that going to slow down the pace of equity issuances, or are you going to see the same kind of pipeline going forward as well?
So I think first a word on State Bank itself. I think what you've seen over the last 2 years has been a very strong revival in the primary markets in India. And we've had, the IPO markets have taken off. I think the only missing piece was perhaps the return of QIP issuances. And I think within that, we hadn't had a really large issuance out of India. So in an Indian context, yes, but we hadn't had like a multi-billion-dollar deal out of India. And I think State Bank of India, 2.3 billion. I mean, it's obviously the largest from India, as you said, but it's also the third largest from Asia Pacific this year.
Yes.
So I think this deal finally checks that box and, completes our whole primary cycle revival. Otherwise, from an issuance pipeline perspective, as you said, we are in a very constructive global environment in terms of liquidity flows. And also, I think, from an India perspective, I think we are, of course, calling for a gradual but accelerating capex revival cycle.
Right.
Obviously, demand for industrial products is holding up well. Demand for consumption products is very robust. And I think you will have Indian companies gear up for that with their balance sheets to position themselves well for that next phase of growth. Which is why I think the supply of paper should continue. And I think given liquidity conditions, they will be very well received by markets.
All right. So which are the sectors that you are watching out for going forward as well? Of course, lots of IPOs also in the pipeline for this year, but a lot of it concentrated in the BFSI sector. So
I think, Nisha, to that extent, see, the IPO pipeline reflects the secondary markets and what is doing well in the secondary markets. And you've seen financials, of course, have been a big part of that. But I would say not just banks, right? So banks, obviously, but also insurance companies. There was an IPO last year, housing finance, the small savings banks. So I think that within that broad financial space, you will still see a huge amount of activity. Apart from that, obviously, anything related to the consumption theme, again, which is a big favorite with secondary market investors. So IPOs from that space will continue to do well. I think also healthcare, the broader healthcare space, within that pharma companies, also some of the niche healthcare companies, technology companies. I think those companies, as and when they come to the market, will also see huge response. I would say those are the three buckets. And then beyond that, if you look at, we've had a couple of InvITs that have listed, and then REITs, which also is a big step by SEBI. I think those deals also should start coming towards the second half. That pace will accelerate. So overall, I think, as I said, I think 2017 should be a great year for Indian issuances.
Are these valuations sustainable? What is in the minds of the investors? Are they ready to put their money on the table at these levels? Yeah.
So I won't comment on specific stocks, as you're aware. But I think, see, look, broadly, valuations are, you can say, are in the top half of where we've historically traded. But again, you have to see it in context of, as I said, a very strong global liquidity context. And India, as always, does get a disproportionate share of emerging market flows. So if you put that in perspective, I think, we have enough and more reasons for India to trade at a premium to both the emerging market peers as well as the developed market, some of the countries. And whether you look at the reform policies that this government has initiated, whether you look at, demonetization was such a big theme, but it's such a big structural positive. We are now 1 month away from GST, which is again a huge positive. So I think there are enough reasons for these valuations to sustain. And when you speak to investors, that's what they'll tell you. I think people are moving away from looking at 6 month or 12 month forward, but looking at a more longer term view, looking at a more holistic picture. And I think in that context, the Indian valuations are, can easily be justified and sustained as we go forward.
All right. And many equity issuances going ahead, and also IPOs in this particular space. So you've done one life insurance, the first one at that. Especially talking about insurance sector, a lot more is in the pipeline. A big one in general insurance is also expected to come. So hopefully you will be looking at that as well. So how is the space developing, and why so much traction now in this particular space?
No, so I think insurance, as you see, even today, you have perhaps 2 companies listed there. And as I said, when investors look at India, financials always become a big proxy for them to play India. I mean, they tend to be the larger companies, they tend to be the more liquid companies, so they are a very natural place for investors to come in and, make their positions. Within that, there are obviously enough banks and NBFCs which are now listed, but as I said, from the insurance perspective, there isn't much that's listed. And I think the performance of, as you mentioned, ICICI Pru Life, the stock's done very, very well since its IPO. And I think it trades, again, coming to your question, it trades at a premium to some of their global peers, but it trades there because of the whole structural story around the Indian demographics, the Indian consumption, and obviously a scarcity premium. As I said, there are very few listed insurance companies.
Right.
And again, general insurance is a new category which will open up, and there's no reason to believe it won't, sustain and justify the same kind of valuations that the life insurers have.
That's true. And REITs as well as InvITs. We saw a couple of InvITs, and after that, the process has slowed down a little. People are a little more cautious.
True.
How do you see?
Nisha, I think my view on that is InvITs are effectively a yield product. And I think we have to be cautious about how we market them to investors. We cannot be selling these products as things which will trade 5 to 10% up on day one, day two. So people, I think the mistake people are making is that they're linking them like an equity IPO, which these are not. Right. So these are more stable return products, and I think you want that investor class coming into this product.
Yes.
So I think you point to the last two deals, but I think that will change. So therefore, the next set of pipeline that comes from those deals, and even these deals, I think over time, as investors understand that this is a different product, this is a more stable return product, I think you will see them trade well, and obviously more new issuances come into the market.
We'll slip into a short breather, but you are in touch with all the investors. I'll pick your brain more on their mindset as well, on the future pipeline and appetite as well. So stay tuned to Big Deal. We have lots more to discuss with Sanjeev Cha.